possible sell. And I said here, fortunately, the dealers have kept the price from dropping through a strike at that point, bearing in mind this was 3 o'clock this morning. So we're safe to begin with, because obviously it's got to start striking out. It's got to start running through some strikes to start picking up gammas. Otherwise, there is no sell to be noted. But you'll see from my final comment, just to reiterate and reinforce the concern, but I am very alert to the negative possibilities and will hit the sell quickly and hard. 3 o'clock this morning, guys. 3 o'clock this morning. So when we look at 3 o'clock this morning and you start looking at where we were on equities, 3 o'clock this morning, guys, equities were on the way up. Equities were trading higher. They're not trading down. They're not selling off. They're actually making higher highs. They're actually making higher highs. And you think to yourself, well, everybody else that seems to send out emails about things happening after they've happened tell you they've already happened, and how good are they because they thought it might happen, but they've got absolutely no evidence in most cases. They've got no evidence that they actually did think it was going to happen. They might have made some statements, doing a Nostradamus, of course, and we do that ourselves. We say there's been a clear warning in equities for a few days, but we know that those clear warnings are event-driven. They are strike-driven, of course. So we're obviously giving you the tools to make sure that whilst we might call a clear warning a couple of days ago, we tell you that, well, it's not going to be a sell until it becomes an actual sell. It's not going to be a sell until we start running some strikes. So when we start thinking about this, we still had an awful lot of upside up here. We've still seen an awful lot of upside. We're not telling you about a market that's fallen after the market that's fallen. We're telling you about a market that could fall if we start seeing top edge selling, if we start seeing those elements. Tie that in this morning, guys, with a rise in the absolutes on the bond market. A rise in the absolutes in the bond market suggests there's going to be big demand for bond buyers. Tie that in with no demand on oil. Tie that in with the pricing of volatilities. Tie that in with everything else we've mentioned. And when the market starts to break south, the market goes almost immediately. When does it break south? London Open, of course, it's into the London Open, breaks south and we start seeing a sell-off. Now, the sell-off on oil's been far better. The sell-off on the euro's been far better for obvious reasons. Some of the drivers have been fundamental. They have been black swan events. Now, we don't know that's going to happen, guys. We don't know that's happening, but the cumulative psyche of everybody that's got inside information tells us that there's more chance of it happening, right? The drive higher here on the absolutes, the purple line, the gap open on the inflation break-evens, telling us that we should be buying bonds. Well, if I'm buying bonds, my natural reaction, of course, is what? My natural reaction is to do what? To buy duration. My natural reaction is to sense that this is a risk-off market, whether it turns into a big sell-off or a small sell-off. I don't have that decision to make. The market will make that decision, guys. My decision is to buy bonds and sell equities. That's it. That's the extent of it. But my real concern was just how much weakness we saw in yesterday's close, the last hour of trading. There was a lot of weakness. Hold on a second.
Hey, good morning, everyone. Happy Friday. Hope you're all doing well. Ready for a good day. I was reading that tweet last night, and Ray is correct. Price was on the way up and traveled hard, and look at that drop. I was thinking through the night, it's like, this is one of those nights you probably should stay up. Hey, good morning, Logan. What a drop. Wish I would have been not sleeping, because it was certainly making new highs, and then look, it just went sideways, like Ray said. Then the sell-off came. It's fast and hard. Now that's a sell-off. Sanity sauce. There you go. Little G Fuel in coffee. And I hope each of you are doing well. What a fantastic week. We've had so many good trades. Gotta love it. Wrap up a fantastic week. And if you're just joining us, Ray had to step away for a moment. Thank you, Paul. And I see a few new guys coming in. Happy Friday. Ray just stepped away for a second. We were covering the markets and he had to step away for a moment. He'll be back shortly. Hey, good morning, Reeve. Good morning, good morning. Hope you're having a nice Friday. Ray stepped away, but I hope some of you guys that saw that tweet that are in during London were able to take advantage of that move. That was a good one. I think I saw it touch like 47, 20, 21, something like that. So, but I turned in before the London Open. I guess it would have been prudent just to have put a short trade on, but could have gone much higher. At that point it wasn't. It was just starting to hit the making new highs.
Sorry about it, guys. So we bought bonds. This puts us in risk off. So we've immediately got a risk off tone. We want to be selling pounds. We want to be selling euros. We know what risk off is generally going to be, as a rule, dollar bullish. And you might be saying, but that's obviously going to be going against the 2s, 5s. Of course it is. It's a different driver today, isn't it? We're hearing sound bites about Germany going into full lockdown. We're hearing sound bites. They're not going into, but we're hearing sound bites. We're hearing negative numbers. We're hearing negativity. We're hearing everything that was coming through the wires had a negative feel about it. The pricing of volatility was a very negative feel. So we obviously dominate the market at the bottom edge. And obviously the takeaway from that long bond wasn't good, sensational. It was bordering on unperfect for a bond. Bearing in mind this is the ZB contract, not the UB contract. We've taken the ZB contract from 160.5 to 162s. 160.5 to 162s. That's a $1,500 profit on the ZB contract. If we did the same trade on the Ultra Bond, we went from a 194 level to 197. We did over $3,000 on the long bond. And I believe Reeve was in it on the Ultra. I haven't heard that from any other of the bond traders, but there's absolutely no reason why all the bond traders would not be in this trade. If you've missed that one, my God. The two biggest driving lines that we use on treasuries were both bullish. What the hell would you miss this for? You couldn't miss it. It was going to be the trade. The high volatility pricing yesterday led you to this trade, Reeve. It wasn't just these two lines opening bullish. It was the story of the background that we tweeted 7 hours earlier. 5 hours earlier. It was 3 o'clock. High volatility. So what does that mean? High volatility is probably somebody's going to buy cheap bonds tomorrow. Let's see what happens. And the market opens gapping up here and you go, I'm getting lower prices. I'm going to buy up bonds here. And you buy up everything that moves. $3,000 profits on the Ultra Bond, guys. You couldn't make it. You couldn't make it up. Anyway, welcome on, guys. I hope you're all good. I'm going to just grab last bits of lunch and we'll get started this afternoon.